All right, let's take a deep dive into Indian celebration wear today.
That's good.
You've sent us a bunch of documents on Vedant Fashions, LTD's Q2 FY25 results, press releases, an investor presentation,
Yep.
even some in-depth financials.
Yeah, it's really fascinating company.
Okay, so
They've managed to tap into something unique,
Yeah.
the intersection of tradition and modern fashion in India.
and they're really thriving.
Yeah.
Their Q2 results show a 22.7% year-over-year revenue growth.
Wow.
That's driven by a 23.9% jump in retail sales and a 17.3% growth in same-store sales.
Yeah. Those numbers are really impressive,
Right.
especially when you consider the bigger picture.
Yeah.
The Indian economy has been facing some headwinds,
Right.
and even Vedant saw a 4.2% revenue dip in the first half of the fiscal year.
Oh, wow.
So this Q2 performance is a major turnaround story.
It really is.
Yeah.
It makes you wonder what their secret is.
Yeah, it's a great question.
Are people just prioritizing celebrations even when the economy is shaky?
That's a really good question.
You know?
And it speaks to the heart of Vedant's strategy, I think.
Yeah.
They position themselves as more than just clothing.
Right.
They're selling the experience of celebration.
I see, yeah.
Yeah.
And speaking of strategy, they just launched a brand new brand called Diwas.
Oh, right.
It's aimed at the value to mid-premium segment of the festive and celebration wear market.
Interesting.
So not quite the same clientele as their flagship brand Manyavar.
Exactly, yeah.
Yeah.
Manyavar has always been positioned as aspirational
Right.
with a higher price point.
Mm-hmm.
But with Diwas, they're expanding their reach,
Okay.
targeting a whole new consumer base without diluting that Manyavar brand.
That's really interesting.
Yeah.
Like they're saying, hey, we want everyone to be part of the celebration,
Right.
regardless of their budget.
Exactly. It's
Uh-uh.
strategically brilliant.
Yeah.
It allows them to capture a wider market share and solidify their presence across different price points.
And their profitability is still strong.
Oh, yeah.
Their gross margin is holding strong at 67.9%.
Wow.
It's, to me, that screams pricing power.
Yeah.
They're clearly in control.
Especially when you consider their no-discount policy for Manyavar.
Right.
In a world where everyone's slashing prices,
Yeah.
they're holding firm, reinforcing that premium image.
Yeah. It's a gamble,
Right.
but it seems to be paying off.
It really does.
Yeah.
Let's take a look at their consolidated balance sheet.
Okay.
So as of September 30, 2024, their total assets stood at
Yeah.
24,628 million Indian rupees,
Okay.
which is slightly lower than the 25,088 million reported at the end of the previous fiscal year.
So a slight decrease.
Yeah.
Interesting.
So what do you think is driving that change?
Well, the key here is their investment portfolio.
Okay.
It seems they've significantly reduced their holdings.
Really?
Down from 3,549 million to 950 million.
Wow.
Yeah, so that accounts for a large chunk of that decrease in total assets. So less money sitting in investments.
Yeah.
That suggests that they're putting those funds to work elsewhere.
Right. It does seem like they're strategically reallocating their capital,
Yeah.
possibly towards growth initiatives.
Okay.
Now, while their investments have decreased,
Mm-hmm.
their fixed assets,
Right.
which include their retail infrastructure,
Okay.
have remained relatively stable.
So it's not...
They've actually added 4.7 thousand square feet of retail space during Q2.
Oh, interesting.
Yeah.
So they're pulling back on investments but expanding their retail presence.
Mm-hmm.
That's interesting.
It paints a picture of a company that's confident in its core business,
Right.
but also looking for strategic growth opportunities.
Yeah.
Almost like they're saying, we're strong where we are.
But we're not afraid to explore new horizons.
Exactly.
Now let's look at their liabilities.
Okay.
Their total liabilities are currently at
Okay.
9,352.93 million Indian rupees.
Okay.
A slight increase from the previous year.
An increase in liabilities.
Yeah, is that something to be concerned about?
Not necessarily.
Okay.
It's crucial to break down those liabilities.
Okay.
A significant portion of that increase comes from their lease obligations,
Right.
which makes sense considering their retail expansion.
So they're taking on more debt, but it's directly tied to their growth strategy.
Exactly.
That seems like a calculated risk.
Yeah, it's not just about the amount of debt.
Right.
It's about how it's being used.
Right.
And in this case, it seems to be fueling those expansion plans.
Now let's shift our focus to their profit and loss statement.
Okay.
I'm interested in their revenue breakdown for Q2
Mm-hmm.
and the first half of FY25.
Okay.
I'm curious to see how those numbers align with their strategic moves.
Sure. So looking at their consolidated statement,
Okay.
their Q2 FY25 revenue from operations reached 2,679 million.
Okay.
This signifies a considerable 22.7% growth compared to the same quarter in the previous fiscal year.
Yeah, that's a big jump in revenue,
It is.
especially considering the 4.2% dip they saw in the first half of the year.
Right.
What's driving this Q2 resurgence?
Well, it's likely a combination of factors.
Okay.
The launch of DWAS is undoubtedly playing a role, tapping into a new customer segment.
Okay.
Their retail expansion is also contributing,
Yeah.
giving them wider reach.
Right.
But the materials don't explicitly detail the specific contribution of each factor.
It would be interesting to see a more granular breakdown of their revenue sources
It would be.
in future reports. But for now,
Yeah.
it's clear that they're firing on all cylinders and their strategic moves are translating into results.
They really are.
All right, now let's move on to their expenses.
Okay.
I'm always curious to see how companies are managing costs,
Yeah.
especially in a volatile economy.
Right.
What jumps out at you from their expense breakdown?
Well, one noticeable trend
Yeah.
is the increase in their cost of materials consumed,
Okay.
particularly raw materials,
Right.
which have risen to 399 million. This is something to keep an eye on, as rising input costs can impact profitability.
That's a really good point.
Yeah.
It's like a tug of war.
Yeah,
They're trying to grow revenue and manage costs simultaneously.
right.
Are they doing anything to address these rising raw material costs?
It's difficult to say without more detail.
Right.
However, their profit before tax for Q2 FY25 reached an impressive 902 million,
Okay.
indicating that they are managing their costs effectively overall.
So despite the increase in raw materials costs, they're still delivering a healthy profit.
Yeah.
That's reassuring.
Their ability to maintain profitability in the face of rising costs suggests a strong understanding of their business and a focus on operational efficiency.
Now let's turn our attention to their cash flow statement for the first half of FY25.
Okay.
Cash flow is the lifeblood of any business.
It is.
So I'm always keen to understand how companies are generating and using cash.
Sure, their cash flow statement reveals some interesting insights. They've generated a healthy 788 million in net cash from operating activities,
Okay.
which indicates that their core business is generating strong cash flow.
That's a good sign.
Yeah.
It means they're making money from their operations, not just relying on external funding.
Mm-hmm.
But we did notice a significant outflow in their investing activities.
Yes.
Primarily due to the acquisition of investments.
Right.
What can you tell us about these investments?
Unfortunately, the materials don't offer specifics about these investments.
Okay.
We know they've pulled back from their existing investment portfolio,
Mm-hmm.
but we don't have details on where those funds have been reallocated.
It's like a little mystery.
Yeah.
They're freeing up cash and investing it somewhere,
Mm-hmm.
but we don't know the destination.
Right.
It definitely raises some questions.
It'll be interesting to learn more about these investments
Yeah.
and their potential impact on the company's future performance.
Right.
You know, it could be a strategic move to enter new markets,
Yeah.
develop new technologies, or enhance their existing capabilities.
It could be any number of things.
Only time will tell.
All right, so we have some intrigue there.
We do.
What about their financing activities?
Well, their financing activities show a net outflow of 2,896 million.
Okay.
A significant portion of this outflow is attributed to dividend payouts to shareholders.
Okay.
They've also made substantial payments toward their lease liabilities.
So they're rewarding their shareholders and managing their debt obligations.
Exactly.
It seems like they're striking a balance between investing in growth
Mm-hmm.
and returning value to their investors.
That's a good observation.
Yeah.
It suggests a responsible approach to financial management.
Okay.
They're not just focused on growth at all costs.
Right.
They're also mindful of their commitments
Okay.
to their shareholders and creditors.
Now let's switch gears and dive into their brand portfolio.
Okay.
They've got this iconic brand, Manuvar,
Yeah.
but they're also branching out. I'm curious to learn more about their strategy for building and managing this brand portfolio.
Sure. So they've adopted a very strategic approach to their brand portfolio,
Okay.
carefully positioning each brand to target specific customer segments
Right.
and market needs.
Yeah.
Their flagship brand, Manuvar, continues to be their crown jewel,
Right.
commanding a strong presence in the men's Indian wedding and celebration wear market.
Manuvar is like the anchor.
It is.
Foundation of their success.
It is.
But it's interesting to see how they're using that foundation to build other brands. It's like they're creating a whole ecosystem of celebration wear.
Exactly. And each brand plays a specific role in that ecosystem.
So tell me more about these other brands.
Right.
What are they all about?
Well, they have Mohey, which is their women's wear brand.
Okay.
It was launched in 2015 and has been steadily gaining traction, capturing a significant share of the women's celebration wear market.
It's like the stylish sister to Manyavar.
That's a great analogy. They've also been very clever with their marketing for Mohey,
Right.
tapping into the aspirations and emotions associated with Indian weddings.
Yeah, their, what was it, their hashtag Dulhan Wali feeling campaign was brilliant.
Oh, yeah, that was a great one.
It really resonated with their target audience,
It did.
capturing the excitement and anticipation of being a bride.
Yeah.
And they even brought on Bollywood actress Janhvi Kapoor as their brand ambassador for Mohey.
That was a really strategic move.
Yeah.
Janhvi Kapoor is a style icon for young India,
Right.
and her association with the brand has undoubtedly boosted Mohey's appeal and visibility.
It's like they're saying, hey, if you want to look and feel like a Bollywood star on your big day,
Right.
Mohey is the brand for you.
Exactly.
So they've got Manyavar for the men, Mohey for the women.
Yep.
What other brands are in their portfolio?
Well, in 2019, they launched Twamev,
Twamev, okay.
which is a premium brand targeting both men and women.
Interesting.
It's positioned at a higher price point, offering a more exclusive and sophisticated collection.
So Twamev is for those who want to take their celebration wear to the next level.
Exactly.
More luxury, more exclusivity.
It's for those who are looking for something truly special.
Yeah, it's like they're catering to every niche within the celebration wear market.
Yeah.
And then, of course, they have their newest brand, Daiwas.
Right. Daiwas is their latest venture, launched just this year. It's targeted at that value to mid-premium segment,
Right.
offering a more affordable yet stylish option for men.
So Daiwas is like the younger, more accessible sibling,
Yeah.
offering a taste of the Manyavar experience at a more approachable price point.
It's a brilliant move to tap into a wider market segment
Yeah.
and potentially capture a larger share of the celebration wear market.
So it seems like they're really focused on offering something for everyone.
They are.
No matter their budget or style preferences. It's an impressive brand portfolio that covers a wide spectrum of the market.
Yeah, but it's not just about having multiple brands.
Yeah.
It's about managing them effectively
Right.
and ensuring that they're all contributing to the overall success of the company.
So now that we've laid the groundwork and explored their brand portfolio, let's dive into their growth strategy.
Okay.
How are they planning to maintain this momentum and achieve their ambitious goals?
Well, their growth strategy is multifaceted,
Okay.
encompassing a range of initiatives designed to expand their market reach,
Okay.
strengthen their brand presence, and enhance their operational efficiency.
So they're not just sitting back and waiting for success to come to them.
Right. They're not resting on their laurels.
They're actively pursuing growth on multiple fronts.
Exactly. They're constantly innovating and pushing boundaries to stay ahead.
So walk me through the key elements of their growth strategy.
Okay.
What are they focusing on?
Well, one of their top priorities is retail expansion.
Okay.
They're aggressively expanding their network of exclusive brand outlets, or EBOs, both within India and internationally.
So their EBO network is already quite extensive.
It is.
With over 650 stores across India and 16 international locations. That's a pretty impressive footprint.
It is.
Where are they focusing their expansion efforts?
They're continuing to expand their presence in major metropolitan areas across India.
Okay.
But they're also venturing into smaller cities and towns,
Oh, interesting.
tapping into new markets and expanding their reach to a wider customer base.
So it's like they're casting a wider net, making sure their brands are accessible to people all over India.
Exactly.
And what about their international expansion plans?
Well, they're strategically targeting key international markets
Okay.
with a strong Indian diaspora, such as the United States, the United Kingdom, Canada, and the Middle East.
So those are markets.
Yeah, those markets offer significant growth potential.
Right.
Because there's a growing demand for Indian celebration wear
Okay.
among people of Indian origin who want to stay connected to their cultural roots.
It's like they're taking a piece of India to the world.
Right.
Sharing their unique style and craftsmanship with a global audience.
Exactly.
So retail expansion is a key pillar of their growth strategy.
Yeah.
What other initiatives are they pursuing?
Well, they're also heavily investing in brand building and marketing.
Right.
They understand that in a competitive market,
Yeah.
it's not enough to just have great products.
Right.
You need to create a strong brand identity and connect with your target audience on an emotional level.
They've been very successful with their marketing campaigns so far.
They have.
You know, their hashtag Duhan Wali feeling campaign for Mohey was a masterpiece,
Yeah.
capturing the hearts and minds of their target audience.
It was, and their decision to bring on Janhvi Kapoor as a brand ambassador was a brilliant move.
Yeah.
She's a style icon for young India,
Mm-hmm.
and her association with the brand has undoubtedly elevated their profile.
It's not just about selling clothes.
Right.
It's about selling a dream, an experience. And they're doing a fantastic job of creating that aspirational image.
Exactly.
So retail expansion, brand building, marketing.
Hmm.
What else is on their growth agenda?
They're also committed to enhancing their technological capabilities,
Oh, okay.
particularly in supply chain management.
That's interesting.
They've implemented data-driven systems and an automated replenishment system
Right.
to optimize inventory and ensure efficient delivery.
So that's really smart.
Yeah,
A robust and efficient supply chain is crucial in today's world.
absolutely.
Consumers expect products to be available when
Yeah.
they want them.
And delays can be costly.
And delays can be very costly.
Yeah.
So they've recognized the importance of that seamless and efficient supply chain.
Mm-hmm.
And they're investing in the technology
Right.
and systems needed to optimize their operations.
Exactly.
So they're expanding their retail presence,
Yep.
building strong brands, investing in technology, anything else.
Well, they're also exploring strategic acquisitions
Oh.
as a way to further strengthen their market position and expand into new segments or product categories.
So acquisitions can be a really powerful tool for growth,
That can be,
allowing companies to gain access to new markets.
yeah, new technologies or capabilities.
And Vedant Fashions has a history of making strategic acquisitions.
You do.
A few years ago, they acquired Mebaz,
Right.
which is a leading ethnic wear brand,
It is this.
which helped them expand their reach and strengthen their presence in the men's celebration wear market.
Exactly.
So they're not afraid to make bold moves when it comes to growth.
They're not.
They're looking at all avenues,
Mhm.
both organic and inorganic,
Yep.
to expand their business and achieve their ambitions.
It's a holistic approach to growth,
Yeah.
combining internal initiatives with strategic acquisitions to create a powerful engine for expansion.
Now let's shift our focus to their financial performance.
Okay.
They've delivered some impressive numbers.
They have.
Particularly in Q2 FY25.
Mm-hmm.
I'm curious to delve deeper into those numbers and understand the key drivers of their success.
Sure. Their financial performance has been consistently strong over the past 5 years,
Yeah.
with impressive revenue growth
Okay.
and robust profitability.
Right.
Their revenue has grown from $9,155 million in FY20 to $13,675 million in FY24,
Wow.
demonstrating their ability to capture market share
Right.
and expand their operations effectively.
That's a remarkable growth trajectory,
It is.
especially considering the recent economic headwinds.
Yeah, the resilience and adaptability are key factors in their success.
Yeah.
They've navigated challenging market conditions
Right.
while continuing to deliver strong financial results.
So what about their profitability?
Well, they've maintained healthy profit margins,
Okay.
with gross margins consistently above 65%
Wow.
and EBITDA margins exceeding 40% in recent years.
So that strong profitability is really a testament to their effective pricing strategy, their
Yeah.
efficient cost management, and their asset-light business model, which allows them to scale their operations without incurring significant capital expenditures.
Exactly.
So they're growing their revenue while maintaining healthy profitability.
Yeah, that's the ideal combination for any business.
It is. What do you attribute this financial success to?
Well, their dominant market position in the men's Indian wedding and celebration wear market
Mm-hmm.
is undoubtedly a key factor.
Right.
Their flagship brand, Manyavar,
Yeah.
enjoys widespread brand recognition
Right.
and a loyal customer base, giving them a significant competitive advantage.
Manyavar is definitely their crown jewel,
It is.
but they've also been successful in building other brands that cater to different segments of the market.
Right.
Their diversified brand portfolio allows them to reach a wider audience
It does.
and capture a larger share of the overall celebration wear market.
Exactly. They've strategically positioned their brands to cover a wide spectrum of price points and customer preferences.
Yeah.
which has been instrumental in their growth and profitability.
And their operational efficiency also plays a role
It does.
in their success.
Yeah.
They've implemented a franchise-led business model,
Right.
which allows them to expand their retail network rapidly without incurring significant capital expenditures.
That's a smart approach to growth.
Yeah.
It allows them to leverage the resources and expertise of their franchise partners while minimizing their own financial risk.
And their strong focus on inventory management
Yeah.
and their efficient supply chain operations also contribute to their overall profitability.
See, it does.
So by minimizing waste, optimizing delivery times,
Right.
and leveraging data-driven systems, they're able to keep costs down and maintain healthy margins.
They've clearly recognized the importance of operational excellence.
Right.
And have invested in the systems and processes needed to achieve it.
So their brand strength, their operational efficiency, and their strategic approach to growth are all key ingredients in their financial success.
They are.
Now let's take a closer look at their Q2 FY25 results.
Okay.
Their Q2 FY25 performance is a testament to their resilience and adaptability. Despite a challenging economic environment, they've delivered impressive revenue growth and maintained healthy profitability.
The real turnaround story.
It is.
They started the fiscal year with a slight dip in revenue, but they've bounced back strongly in Q2.
It's like they found their stride and are firing on all cylinders.
Exactly. Their Q2 results suggest that they've successfully navigated the initial headwinds and are now capitalizing on the growing demand for celebration wear.
Let's delve into the numbers.
Okay.
Their consolidated revenue from operations for Q2 FY25 reached 2,679 million Indian rupees.
A remarkable 22.7% year-over-year growth.
Yeah, that's an impressive growth rate.
It is.
Particularly after the 4.2% revenue decline they experienced in the first half of the year.
Right. It indicates a robust rebound in demand.
Yeah, it's like they turned the corner.
They have.
And are now back on a strong growth trajectory. What factors do you attribute this Q2 resurgence to?
Well, while the materials don't explicitly detail the specific drivers, it's plausible that the launch of their new brand, Daiwas, along with their continued retail expansion efforts, played a significant role.
It's a reasonable assumption.
It is.
You know, new brands and new stores often translate into new revenue streams.
They do.
So it makes sense that these initiatives would contribute to their Q2 growth. What about their profitability?
Well, despite a slight increase in expenses, primarily due to rising raw material costs, their profit before tax for Q2 FY25 stood at $902 million. Reflecting a healthy growth rate.
So even though they face some inflationary pressures, they still managed to deliver impressive profit growth.
Exactly. Their ability to maintain profitability amidst rising input costs suggests a strong grasp of their business dynamics.
And an effective pricing strategy.
Now let's turn our attention to their cash flow statement for H1 FY25.
Okay.
You know, cash flow is often considered the lifeblood of a business.
It is.
So I'm always keen to understand how companies are generating and using cash.
Sure. Their cash flow statement reveals a net increase in cash and cash equivalents of $223 million for the first half of the fiscal year.
That's a positive sign.
It is.
Indicating that their core operations are generating cash and that they're effectively managing their working capital. But we did notice a significant cash outflow in their investing activities.
We did.
Primarily related to the acquisition of investments.
Yes.
What can you tell us about these investments?
Unfortunately, the materials we have don't provide specific details about the nature of these investments. We know that they've reduced their holdings in their existing investment portfolio. But we don't have information on where those funds have been reallocated.
So it's like a bit of a mystery.
It is. They're freeing up cash and investing it somewhere, but we don't have all the pieces to understand the bigger picture.
It's definitely something to keep an eye on.
It is, in future reports. Okay, so we have, so what about their financing activities?
Well, their financing activities show a net outflow of $2,896 million. A significant portion of this outflow is attributed to dividend payouts to shareholders. They've also made substantial payments towards their lease liabilities.
Okay, so they're rewarding their shareholders and managing their debt obligations.
Exactly.
It seems like they're striking a balance between investing in growth and returning value to their investors.
It suggests a responsible approach to financial management.
All right.
And they're not just focused on growth at all costs.
Right.
They're also mindful of their commitments to their shareholders and creditors.
Now let's turn our attention to their balance sheet.
Okay.
All right, their consolidated balance sheet. As of September 30, 2024 shows total assets of $24,628 million, which is slightly lower than the $25,088 million reported at the end of the previous fiscal year.
So a slight decrease.
Yeah.
What's driving that?
So the primary driver is the reduction in their investment portfolio, which we discussed earlier.
Yeah.
Their investments have decreased from $3,549 million to $950 million.
So they're shifting assets away from their investment portfolio.
Yeah, possibly to fund growth initiatives.
That's a plausible explanation.
Yeah.
It suggests a strategic reallocation of capital.
What about their liabilities?
Well, their total liabilities are currently. It's interesting how they're approaching this value segment with DWAS.
Yeah.
It's not just about offering lower prices.
Yeah.
It's about understanding the aspirations of that consumer base.
Yeah, value doesn't mean compromising on style or quality.
Exactly.
Right.
And that's where DWAS comes in.
Yeah.
They're offering a product that's stylish, well-made, and accessible to a wider audience.
It's like they're democratizing celebration wear.
Yeah.
Making it possible for more people to participate in these special occasions without breaking the bank.
Precisely.
Okay, so we've talked about their brand portfolio, their growth strategy.
Yeah.
Now let's zoom in on their Q2 performance.
Okay.
You know, their revenue growth has been remarkable.
It has.
But I'm curious about what's happening beneath the surface.
Okay.
What are the key drivers of this growth?
Well, the launch of DWAS is undoubtedly playing a role.
Okay.
It's tapping into a new customer segment, generating incremental revenue.
Okay.
But their existing brands are also performing well.
So it's not just a one-hit wonder. They're seeing growth across the board.
Exactly.
Okay.
Manuvar continues to be their flagship brand, driving a significant portion of their revenue. And Mohey, their women's wear brand, is also gaining traction, capturing a growing share of the market.
It's impressive how they've managed to create this portfolio of brands that are all contributing to their success.
Yeah.
It's like they've got a well-oiled machine with each brand playing its part.
Yeah, they've created a synergistic ecosystem where their brands complement each other and work together to drive growth.
Okay, so their brand portfolio is strong.
Yeah.
And their revenue growth is impressive. But what about their profitability?
Well,
are they managing to convert that revenue into profits?
Absolutely.
Okay.
They've been very successful in maintaining healthy profit margins.
Yeah.
Their gross margin for Q2 was 67.9%.
Wow.
Which is a testament to their pricing power.
Okay.
And their ability to manage costs effectively.
So that's a very healthy margin.
It is.
It indicates that they're not just selling a lot of products, but they're selling them at a price that allows them to make a good profit.
Exactly.
So what about their operating expenses?
Well, they're keeping a tight rein on their operating expenses.
Okay.
Their operating margin for Q2 was an impressive 41.1%.
Okay.
Which means that for every rupee of revenue they generate, they're keeping 41.1 pays as operating profit.
So that's a sign of operational efficiency.
It is.
They're managing their costs effectively.
Yeah.
Maximizing their profitability.
Precisely. They've implemented a number of initiatives to streamline their operations, improve efficiency, control costs.
So it's a combination of strong revenue growth, healthy margins, efficient cost management that's driving their profitability.
It is a winning formula.
It really is, yeah. Now let's switch gears and talk about their cash flow.
Okay.
Cash flow is often referred to as the lifeblood of a business.
It is.
It's essential for funding growth, paying dividends, managing debt. How's their cash flow looking?
Well, their cash flow from operations is very strong. For the first half of FY25, they generated $788 million in net cash from operating activities.
So that's a healthy number.
It is.
Suggests that their core business is generating plenty of cash.
Exactly. A sign of a healthy and sustainable business.
Right. But we did notice a significant outflow.
We did.
In their investing activities.
Right. Primarily related to the acquisition of investments.
That's the mystery we touched upon earlier.
It is.
They're freeing up cash, investing it somewhere, but we don't have the details on where those funds are going.
It'll be interesting to see how this unfolds in future reports.
Right.
Are they making strategic acquisition?
Right.
Are they investing in new technologies?
Right.
Are they diversifying their portfolio?
Yeah, it's definitely something to keep an eye on.
It is.
And speaking of things to keep an eye on,
yeah.
What about their debt levels?
Well,
are they taking on too much debt to fund this growth?
Their debt levels appear manageable.
Okay.
They've taken on some additional debt.
Right.
Primarily to finance their retail expansion.
Right.
But their overall leverage is still within a healthy range.
So that's reassuring.
Yeah.
It's important for companies to maintain a healthy balance sheet.
Absolutely.
Especially in a dynamic and sometimes volatile market environment.
Excessive debt can be a burden.
Right.
Especially if the economy takes a downturn.
Right.
But Vedant seems to be managing their debt responsibly.
So their financial performance is strong.
Yeah.
Their cash flow is healthy. And their debt levels are manageable.
It paints a picture of a company that's in good financial shape.
It does.
They've got a solid financial foundation, which gives them flexibility to pursue those growth ambitions.
Now let's shift our focus to their marketing and brand building efforts.
Okay.
They've been recognized for their creative and impactful campaigns.
They have.
Particularly their hashtag Dulhan Wali feeling campaign for Mohe.
Right.
What's their secret sauce?
Well, they have a deep understanding of their target audience, a knack for crafting campaigns that resonate with their aspirations and emotions. They've also been very effective in leveraging celebrity endorsements and sponsorships to enhance their brand visibility and appeal.
They seem to have mastered the art of storytelling.
They have.
And emotional marketing.
Yeah.
You know, they're not just selling clothes. They're selling a dream, a feeling, an experience.
Precisely. And they're doing it in a way that's authentic and relatable.
Right.
You know, their campaigns often feature real people and real stories, which makes them even more impactful.
So they're tapping into the cultural significance of Indian celebrations, weaving that into their brand narrative.
It is a powerful strategy.
It is. It really is.
And it's clearly resonating with their target audience.
Okay, so their marketing strategy is on point. Now let's talk about how they're getting their products into the hands of consumers.
Okay.
You know, they've adopted an omni-channel approach, leveraging both online and offline channels.
Right.
Tell us more about their distribution strategy.
Well, their primary channel is their extensive network of exclusive brand outlets, or EBOs.
Right.
They have over 650 EBOs across India.
Okay.
And they're continuing to expand.
And their EBOs are not just stores.
Right.
You know, they're designed to be an experience.
Yeah.
You know, they're beautifully designed, well merchandised, staffed by knowledgeable and friendly salespeople.
They've created a shopping environment that's both luxurious and inviting. It's an important part of their brand experience.
But they're not just relying on their EBOs.
Right.
They also have a strong online presence.
They do.
They operate their own website for online sales, and they're active on major e-commerce platforms.
Exactly. They understand the importance of meeting their customers where they are.
Right.
And increasingly, that means online.
Yeah.
You know, their website and their presence on those platforms allows them to reach a wider audience.
Right.
Including those who prefer the convenience of online shopping.
So they're covering all the bases,
Yeah.
from brick and mortar stores to online marketplaces.
Exactly. They're ensuring that their products are easily accessible to their target audience,
Okay.
regardless of their shopping preferences.
Now let's dive into their management team
Okay.
and board of directors.
Right.
You know, the people behind a company
Yeah.
can make all the difference.
They can.
So I'm always interested in learning about the leadership team.
Sure. They have a very experienced and capable management team,
Yeah.
led by their founder and chairman, Ravi Modi.
Right. Ravi Modi is a visionary leader.
He is.
Who has been instrumental in building the company from the ground up.
He's passionate about the brand. And his enthusiasm is contagious.
You're absolutely right. He's
Yeah.
a true entrepreneur.
He is.
Who has built a successful business based on his passion, his vision, and his hard work.
And they've assembled a strong board of directors.
Right.
Comprising both independent and executive directors.
And the board provides strategic guidance.
It does.
Oversight and accountability,
Right.
ensuring that the company is well managed and that its interests are aligned with those of its stakeholders.
Their commitment to good corporate governance is commendable.
It really is.
It's a sign of a company that takes its responsibilities seriously and is committed to operating ethically and transparently.
Okay, we've covered a lot of ground here.
We have.
But I want to take a closer look at their financials.
Okay.
You know, their Q2 performance was impressive.
Yeah.
But I'm curious to understand what's happening beneath the surface.
Okay.
Let's dissect their financial statements.
Okay.
See what insights we can glean.
Sure. Their financial statements provide a wealth of information about their performance, their financial health, and their strategic direction.
So let's start with their profit and loss statement.
Okay.
Or P&L.
Right.
This statement tells us how much revenue they're generating, how much it costs them to generate that revenue, how much profit they're making.
Okay, looking at their consolidated P&L for Q2 FY25, we see that their revenue from operations grew by an impressive 22.7% year over year, reaching $2,679 million.
So that's a substantial jump in revenue.
It is.
Especially considering the 4.2% revenue decline they experienced in the first half of the fiscal year.
Indicates a strong rebound in demand.
It does.
Yeah, and it's driven by a combination of factors.
Well, including
the launch of their new brand, These Was, their ongoing retail expansion efforts, and the strong performance of their existing brands.
So they're firing on all cylinders.
They are.
Their strategic moves are translating into tangible results.
Yeah, now let's move down the P&L.
Oh.
Look at their expenses.
Okay, what's happening on that front?
Well, their total expenses for Q2 FY25 stand at $1,970 million.
Okay.
This represents a slight increase compared to the same quarter last year.
Right.
But their revenue has also grown significantly.
So their expenses are increasing, but they're growing at a slower rate than their revenue.
Right.
Which means their profitability is improving.
Precisely.
Okay.
And if we break down their expenses further, we see that the most significant increase is in their cost of materials consumed.
Right.
Particularly raw materials.
Right. That's something we touched upon earlier.
It is.
You know, rising raw material costs are a challenge for many businesses.
Yeah, Vedant's not immune to this trend. But they're still managing to maintain healthy profit margins.
Right.
Despite this challenge,
okay,
their gross margin for Q2 was 67.9%.
Yeah.
Which is very impressive.
So they're managing their costs effectively.
Yeah.
And passing on some of the increase in raw material costs to consumers.
Right.
Without compromising their profitability.
Precisely. They're striking a balance.
Yeah.
Between maintaining their margins and remaining competitive.
Now let's move down the P&L.
Okay.
Look at their profit before tax.
Right.
This is the bottom line. It tells us how much profit they're making.
Right.
Before taking into account taxes.
Their profit before tax for Q2 FY25 reached $902 million.
Okay.
Reflecting a substantial increase compared to the same period last year.
So they're growing their revenue,
yeah,
managing their costs effectively, and generating healthy profits.
That's a great story to tell.
It really is.
Yeah.
Now let's shift our attention to their cash flow statement.
Okay.
This statement provides insights into how they're generating and using cash.
It does.
Which is essential for understanding their financial health and their ability to fund growth initiatives.
Sure. Their cash flow statement for H1 FY25 reveals some interesting trends.
Okay.
Their net cash generated from operating activities stands at a healthy $788 million.
Okay, good.
This means that their core operations are generating strong positive cash flow.
So that's a positive sign.
It is.
It means they're making money from their day-to-day operations.
Exactly.
But they also have a significant outflow
they do.
In their investing activities.
Yes, their investing activities show a net cash usage of $2,332 million.
Okay.
Primarily due to the acquisition of investments.
This is the mystery we've been discussing.
Right.
You know, we know they've pulled back from their existing investment portfolio, but we don't have details on where those funds have been reallocated.
It's a bit of a black box at this point.
It is.
But it suggests they're making strategic investments.
Right.
Potentially in new technologies, new markets, new capabilities.
It will be interesting to see how these investments play out in the coming quarters and years.
Yeah, something to watch closely.
It is.
Yeah.
Now let's turn our attention to their financing activities.
Okay.
Their financing activities reflect a net cash outflow of $2,896 million.
Oh.
This is primarily due to significant dividend payouts
Right.
and principal and interest payments
Okay.
related to lease liabilities.
So they're returning value to their shareholders through dividends, and they're managing their debt obligation.
Exactly. They're balancing their financial priorities effectively.
Okay.
They're investing in growth, rewarding their shareholders, managing their debt responsibly.
Now let's move on to their balance sheet.
Okay.
This statement provides a snapshot of their assets, liabilities, and equity at a specific point in time.
Their consolidated balance sheet as of September 30, 2024 shows total assets of $24,628 million.
Okay.
This is slightly lower than the $25,088 million reported at the end of the previous fiscal year.
That slight decrease is primarily due to the reduction
in their investment portfolio, which you've discussed earlier.
Exactly. Their investments, which include cash and bank balances, have decreased from $3,549 million to $950 million.
So they're shifting assets away from their investment portfolio?
Right.
Possibly to fund growth initiatives.
That's a plausible explanation.
Okay.
Suggests a strategic reallocation of capital.
What about their liabilities?
Well, their total liabilities stand at $9,352.93 million.
Okay.
Showing an increase from $9,068.76 million at the end of the last fiscal year.
So an increase.
Yeah. This increase is primarily driven by a rise in both their current and non-current liabilities.
Can you break that down a bit further?
Sure.
What are the key components of those liabilities?
A major chunk of their non-current liabilities comprises lease obligations, which have increased slightly to $3,368.31 million.
Okay.
Their deposits also saw a minor increase,
Okay.
reaching $1,245.29 million.
So their lease obligations and deposits are the main drivers
They are.
of their non-current liabilities.
Right.
What about on the current side?
Trade payables constitute a significant portion of their current liabilities,
You're right.
totaling $967 million.
Okay.
Additionally, their other current liabilities, which include various short-term obligations, have also increased to $1,647 million.
Okay, so they're taking on more debt.
Right.
But it appears to be primarily related.
It is.
To their expansion plans and their growing operations.
Exactly.
You know, their lease obligations are increasing as they open new stores.
As they open new stores.
And their trade payables are rising as they scale up their purchases.
It's important to assess debt in the context of the company's overall financial health and growth strategy.
Right.
In Vedant's case, the increase in liabilities appears to be a calculated move to support their expansion plans.
So it seems like they're managing their debt responsibly and using it to fuel their growth.
Yeah, now let's shift gears and talk about their marketing and brand building efforts, which have been quite successful so far.
They have.
What sets their marketing apart from the competition? Well, they've implemented a range of creative marketing initiatives, often leveraging emotional storytelling and celebrity endorsements to build strong brand connections with consumers. They've also been recognized for their innovative marketing campaigns through various awards and accolades.
That's impressive. Can you share some specific examples that highlight their marketing approach?
Their onboarding of Bollywood actress Janhvi Kapoor as the brand ambassador for their women's wear brand. Mohe is a prime example of their celebrity endorsement strategy. They've also launched campaigns like #DulhanWali feeling for Mohe, aiming to evoke the emotions and aspirations associated with being a bride in India.
That's a clever way to tap into the cultural significance of weddings.
It is.
And create a strong emotional resonance with their target audience.
Exactly.
Do you have any other examples that showcase their marketing prowess?
Yes. They've been actively involved in sponsorships. Including being the official Indian wear partner for multiple IPL teams. And participating in events like Femina Miss India. These sponsorships provide valuable brand visibility and associate them with prestigious events.
So they're certainly not shying away from the spotlight.
Nope.
They're putting their brand front and center, associating themselves with events and personalities that align with their target audience's interests and aspirations.
Exactly. They're creating a sense of excitement and aspiration around their brands making them synonymous with celebration and special occasions.
Now let's talk about their presence across different distribution channels.
Okay.
They've adopted an omni-channel approach, leveraging a mix of EBOs, MBOs,
Right.
LFS,
Yep.
and online platforms to reach a wide customer base.
Yeah, their EBO network is their primary channel,
Okay.
accounting for a significant portion of their sales.
Right.
They have over 650 EBOs across India
Yeah.
and 16 international locations.
That's an impressive retail network.
It is.
And their EBOs are more than just stores.
Right.
They're designed to be immersive brand experiences, offering personalized service, expert styling advice, and a carefully curated selection of products.
They've created a shopping environment that's both luxurious and welcoming, where customers can feel pampered and inspired.
And they're not limiting themselves to just their own stores.
Right.
They're also leveraging multi-brand outlets, or MBOs, to expand their reach, tap into new customer segments.
Exactly. MBOs allow them to reach a wider audience and introduce their brands to customers who might not otherwise visit their exclusive brand outlets.
So it's like they're casting a wider net, ensuring their brands are accessible to a diverse range of consumers.
And they're not just focused on offline channels.
Right.
They've also embraced the digital world, recognizing the growing importance of e-commerce.
Right.
They operate their own website for online sales.
Okay.
And they have a presence on leading lateral e-commerce platforms.
So it's a smart omni-channel strategy, allowing them to cater to both traditional shoppers and those who prefer the convenience of online shopping.
Absolutely. They're meeting their customers where they are, whether it's in a physical store or online.
Now let's talk about their leadership.
Okay.
What can you tell us about the team guiding Vedant Fashions?
Well, their management team is comprised of seasoned professionals with deep experience in the retail and fashion industry.
Right.
Ravi Modi, the company's founder and chairman, is a key figure, bringing his entrepreneurial vision and industry expertise to the table.
It's always inspiring to see a founder-led company achieve such success.
Yeah, what about their board of directors?
Yeah, what about their board?
Well, their board is a mix of independent and executive directors, providing a balance of perspectives and expertise. This ensures robust oversight and strategic guidance.
And they've engaged a Big Four auditing firm.
They have.
Demonstrating their commitment to transparency and high standards of financial reporting. That commitment to good governance is crucial.
Absolutely.
Especially for a company of this size and stature.
Yeah, now let's turn our attention to their social responsibility initiatives.
So what are they doing in that realm?
Well, they've embraced ESG principles. Recognizing the importance of environmental, social, and governance factors in their operations. They actively engage in CSR initiatives, focusing on community development and social welfare.
That's commendable.
It is.
It shows they're not just focused on profits, but also on making a positive impact on society.
Exactly. They're taking a holistic approach to business, recognizing that their success is intertwined with the well-being of their employees, their customers, and the communities they operate in.
Their commitment to sustainability and social responsibility aligns with the growing expectations of consumers and investors who are increasingly prioritizing companies that operate ethically and responsibly.
Absolutely. It's no longer just about profits. It's about purpose.
It really is.
Yeah.
Okay, we've covered a lot of ground here.
We have.
We've explored their brand portfolio, growth strategy, their financial performance, their marketing efforts, their distribution channels, their leadership team, and their social responsibility initiatives.
It's clear they've built a very successful and well-rounded business.
You have a lot of things going right.
They do.
They're a company to watch.
They are.
But as with any company, there are always challenges and risks to consider.
No business operates in a vacuum. You know, there are always external factors that can impact performance. And there are always internal challenges to overcome.
So what are some of the potential risks and challenges they might face moving forward?
Well, one of the most significant challenges is maintaining their growth momentum. Amidst a potentially slowing economy. You know, consumer spending can be volatile. Especially in times of economic uncertainty. Which could impact demand for their products.
That's a valid concern.
It is.
You know, economic headwinds can be unpredictable.
They can be.
and challenging to navigate.
Yeah. What other risks should they be aware of?
Yeah.
Well, the competitive landscape is constantly evolving.
Right.
New entrants and existing players are vying for market share,
Mm-hmm.
potentially leading to pricing pressure and a need for continuous innovation to stay ahead.
So staying competitive is paramount.
Yeah. How can they address these challenges?
Yeah.
Well, they can leverage their established brand reputation, their diverse product.
All right, so we've been examining Vedant fashions like from every angle. You know, we've talked about their financials, their brands, their growth strategies.
Yep.
But let's step back for a minute and consider the bigger picture.
All right.
What do you think?
Well, what's fascinating to me about Vedant is they're not just selling clothes.
Right.
They're tapping into something much deeper.
Yeah.
The emotions, the traditions, you know, the aspirations associated with Indian celebrations.
So it's like they're selling a piece of cultural identity.
Exactly.
Yeah.
And they're doing it with a really keen understanding of their audience.
Right.
They know that these celebrations are more than just events.
Yeah.
You know, they're milestones.
Right.
They're expressions of love and family, moments that people cherish.
And Vedant is there providing the perfect attire.
Exactly.
To make those moments even more special.
They're not just dressing people.
Right.
They're helping them create memories.
Okay, so let's shift gears a bit and talk about some specific areas that might be particularly interesting for investors.
Sure.
One thing that stands out to me is their inventory management.
Yeah.
You know, the fashion industry is notoriously fickle.
It is.
With trends changing rapidly.
Right.
You know, Vedant operates in a niche within that industry, but even so, your ability to manage inventory effectively is crucial.
Absolutely. It's like walking a tightrope.
Yeah.
You need to have enough inventory to meet demand.
Right.
But not so much that you're left with unsold merchandise.
If trends shift.
If trends shift, exactly.
And that's where their data-driven approach comes in.
Wow.
So they're using technology to track sales patterns, analyze trends, and forecast demand, which helps them optimize their inventory levels. Exactly.
And minimize waste.
So they're not just relying on gut feeling or guesswork.
They're using data to make informed decisions.
Exactly.
About what to produce, how much to produce, and when to produce it.
And that's essential for maintaining profitability.
It is.
In a fast-paced industry like fashion.
Absolutely. Now, another area investors should keep an eye on is their expansion strategy.
Yeah.
They've been aggressively expanding their retail network, both domestically and internationally.
Their expansion is impressive, but it also comes with risks. They need to make sure that they're entering new markets strategically. You know, choosing locations that align with their target audience and brand positioning.
And they need to make sure they're not overextending themselves. You know, growth needs to be sustainable.
It does, not just rapid.
You need to find that right balance.
Yeah.
Between ambition and prudence. Make sure they're not growing faster than they can manage effectively.
So inventory management and expansion strategy are two key areas for investors to watch. What else should they be paying attention to?
Well, their marketing and branding efforts are crucial for maintaining their competitive edge.
They need to continue to invest in those innovative campaigns that resonate with their target audience and nurture and protect their brand image.
Yeah, they've done a great job so far.
They have.
Creating that strong brand identity that's synonymous with celebration and style.
But they can't afford to become complacent.
No, they can't. You know, the fashion industry is constantly evolving. Consumer preferences can shift quickly.
They can.
They need to stay ahead of the curve. Anticipate trends and adapt their marketing and branding strategies accordingly.
So we've talked about some specific areas for investors to watch. Let's zoom out again. Consider the bigger picture. What's the most compelling aspect of Vedant Fashions, in your opinion?
Well, to me, it's their ability to connect with their customers. On an emotional level. You know, they're not just selling clothes. They're selling a dream, an aspiration, a feeling of belonging, celebration.
So it's like they're tapping into something primal. You know, something that resonates deeply with people's desire to connect, to celebrate, to create memories that will last a lifetime.
Exactly. They've managed to create a brand that's more than just a name or a logo.
It's
emotion and experience.
Right.
A reflection of people's hopes and dreams.
And that's a powerful thing.
It is. It's what sets them apart from the competition.
Yeah.
What will ultimately drive their long-term success.
Well, on that note, I think we've reached the end of our deep dive into Vedant Fashion's Ltd's Q2 FY25 results.
We've covered a lot of ground.
Oh, yeah.
Exploring their financials, their brands, their growth strategies.
Right, their marketing efforts.
Their leadership team.
Yeah.
We've also discussed the potential challenges and risks they face and their outlook for the future.
It's been a fascinating journey.
It has been.
You know, providing insights into a company that's truly tapping into something special.
As always, we encourage you to continue exploring.
Yes.
Learning, questioning.
Stay curious.
Stay informed.
Stay engaged.
And till next time.
Yeah.
Happy celebrating.
Eli DeVungle. That's all for today's deep dive.
Yeah?
We hope you found this exploration of Vedant Fashion's Ltd's Q2 FY25 results insightful and engaging.
As always, we encourage you to continue exploring and learning about the companies and industries that shape our world.
Until next time, stay curious.